Okay, guys, today I think we should start now. Okay, so today I was planning to give you some classes about support and resistance because I told you guys that it's too complicated and it's very simple. During our previous class, we couldn't able to touch those areas. So I think now we should talk about it, talk about the support and resistance area. Okay, and and if you practice it every day, you will get some winning, some good winning ratio. Okay, okay, I'm trying to find the yeah, I'm having 10 members. Okay, I think we should go on. So I think we will spend like 2 hours today. Okay. Now, in the previous class, we talked about so many things in the market. We talk about candlestick. We talk about important candlestick. That is, when you see them on your chart, you should observe them and you should take note of them. Candlestick doesn't just form anyhow. They form due to some reason. So all those things we have talked about it in the previous class. That is, on the first day, we talk about some important candlestick. And all these important candlesticks, they are very useful and they interpret what will be the next candle. So they are very useful in the chart and they can be used to determine what will be the next candle. Only just if you understand the candlestick language. You didn't see anything? Okay, I think it's from your side. They not this, not here. Maybe check it well because everything is clear here. Okay. Others, are you also having the same problem? If you are not seeing anything, just let me know. Maybe from my side or your side there. Okay, whiteboard. Yes, I'm the one that set it to because that is where I want to start from. So I cannot just jump into the chat. Okay. We talk about, as I was saying, we talk about so many things in the market. We talk about candlestick. We talk about some how to trade on buyer's area and seller's area. When all these candlesticks appear on the market, on your chart, what did they tell you and how can you interpret them to be the next market move? Okay. So today we're still going to do some recap of those previous class. But today's class we base on support and resistance strategy. If you observe that the video I just uploaded on my YouTube channel is based on support and resistance strategy. Now, the question is, how do you draw support and resistance strategy? Okay, I think someone. How do you draw support and resistance strategy? That would be the main question. one of you may be asking. See black screen, or what are you saying? Blank screen, because now I'm on the chat now. Can you see the candles? Yes, I option chart. Can you see the candles? Okay, no problem. Okay, I think we should continue. Now, those videos based on how I trade on support and resistance. And I may observe that maybe some of you have tried it, but it didn't work for you. There's no big deal there. It's just a logic and it's just understanding the market. Okay, give me some minutes, guys. I'm coming. Give me some minutes because I'm trying to bring up the video. So I'll use that to explain. Okay, guys, I'm coming.
Hello traders, welcome to my channel.
In this video, I want to show you how. Okay, can you see the chart now? Can you see the chart? Okay, so let's start. Yes, yes, because it's the video I made. So I want to explain some things there. on that video. Okay. Now, when you are trading support and resistance, let me first explain before I go for the raw thorough explanation. When you are trading support and resistance, let's say here we have, let's say this a type of, this a market like this. The market is moving like this in this range, Maybe on reaching here, the market start to form small candles, then it break this level, then continue again. Then again, it went back, it didn't reach that level, it go down again, and again, it went up. So here, we have known that this is our, support, previous support. These are previous supports. Okay, this is our previous support. And our previous support, the market is approaching maybe it break this support area, this support level, and then the market went back again, it went up, and again it went down again, and then again it went up. So now when you are trading this kind of strategy, you should always wait for the best opportunity. Number one, you can see this is a previous support level. These are previous support level, and then this market is approaching that level. That means at this time, this market will form a resistance level. It will form a resistance level. So when you are trading SNR levels, you should choose the best SNR levels. So because we have so many levels in the chart, you choose the best SNR level. Let me show you what are those levels. Now look at this chart. Look at this chart. Here we have a resistance. Remember what I told you, that when you are drawing support and resistance, you are not placing the line on the wick. This is not how to draw support and resistance. You are only placing the line at the body of the candle. Because this line you are seeing here is show you. This line you are seeing here is a seller's area, seller's entry point, not area now. It's a seller's entry point. So when the market break this level, that means after this market break this level and then seller's enter. So from here and here again. So if you draw your line, okay, let me draw the line very well. Let me draw the line very well, okay? If you want to draw an area, let's say seller's area, look at this point here, this line. You place your line here and then look for the next candle that break that level and then sellers enter. It means that this is the next seller's area. So this, what I draw now, this level that I draw is seller's area. This level that I draw is seller's area. You can see a seller's entry from this point, and again a seller's entry from this point. Look at the chart very well. I place the line on the wick. So you should observe the wick. I place the line on the wick. So the seller's entry point is here, and here also the seller's entry point is here. So this is these two lines I draw. These two lines I draw is seller's area. That means if buyers should come to this level and then reject from this level and close at this level inside this area, that means sellers will enter the market. So this is how to draw an area. Then the video I made is not all about buyers and sellers area. It's about resistance level and how to draw support and resistance area. Like I told you that drawing support and resistance area is not only by using one line. you will notice that I'm using two lines. Most of the time I use one line because I already know where I will place the other line. I know what the other line, where I will place the other line. So I just place one line. But in the last video which I just upload, I used two lines just for me to let you know the strong levels, the strong area. Like this now, this is a level. So if you want to place your line in this type of market, you should place at the lowest candle, not this one. Because if you are placing your line at the body of this bullish candle, we are not considering this bearish candle. You can see it didn't touch the bearish candle. That means you shift the line to the lowest point, to the lowest candle. Same thing, if this bullish candle maybe was a little lower and this bearish candle was little higher, you place the line on the bullish candle that is lower. Then same thing here, the bearish candle is lower and the bullish candle is higher. You place the line at the body of the bearish candle. So it's touching both the body of the bearish and the body of the bullish. So this is a perfect level. How to draw level. Now, how do you draw an area? Let's say, for example, now you will notice that when I'm drawing the line, I always observe the time. I always look at the time here. That means before I will draw an area, I must look at the time. How many seconds do I have to draw the area? Now, when I draw an area, this first thing I do, I look at this candle. Now the candle is forming a green candle. Down, we quickly go to the left side. I'll look for possible strong reversal area. Like here, the market reversed multiple times here. So I will just place my line here at the body of the candle, one. Then I will look very well. This line I place here, how many body did it touch? Not the wick. I'm not talking about the wick. How many body did this candle touch? This line, because this is where I place the line. How many body did it touch? I look at it. I didn't see, it didn't touch any body here. What I mean by body, this is what I mean. That is, if I place the line here, this line at the body of this bearish candle, it's supposed to touch another body of maybe bullish or bearish body here at the closing line of the candle. It's supposed to touch it, but here it didn't touch it. This one only crossed it. This one crossed it. This one crossed it. So I will look for it very well. I will quickly go to the left side again and look for it very well to make sure that maybe that level is strong. If that level I draw is very strong, then I will look at it and look at this one. You will notice that yes, this one also is touching the body. That means this line I draw is a strong level. This line I draw is a strong level. You can see it's touching the body of this bearish candle. And again, on the right side, it's also touching the body of this bullish bearish candle. So it means that this level is strong. This level is strong. Now, how do you draw an area? The same way you draw this level, in the same way you will draw an area. So now let's draw an area. Maybe the first line I draw here. So I will just choose any level, any strong level. I'm not going to the top side. I'm only going to where the light candle is. Then maybe this one, this bullish and bearish candle that reverse the market here. Then I will look at it. How many body did this candle touch? Here, okay, you can see it touched this one. That means this line that I draw, this first one and this one is a strong level, is a strong area. Now look at it. This bearish candle closed at that area with a rejection. The next candle was bullish. Now look at it. This bullish candle crossed the line, crossed the area, the next candle was bullish. Look at this one also. This bearish candle crossed that area, the next candle was bearish. Now look at this one. Bearish, this bullish candle crossed the area, the next candle was bullish. But this one, it closed exactly at that area with a rejection. So the next candle was what? Bullish. Okay, this is how to draw support and resistance area, support and resistance level. So you can see that it took me time to draw it, but if I'm the one trading, I know how I can do it just for me to be fast enough. So now this area I have drawn is a strong area, strong reversal area. So it now depends any candle that form at that area, either bullish candle or bearish. Now, this area I've drawn, if the bullish candle break that area, like now you can see very well, this bullish candle break it. So don't bother yourself, just place a call option with confidence. And here also, the bearish candle break that area, though you can see some rejection. So don't bother yourself, just place a put option. Here also, it break that area, a Maribozu candle, don't bother yourself, place a call option. But this one closed exactly at that area with a rejection. So it means that there are two things that is okay, network guys, network problem. So it means that this candle here that closed at that area, there are so many reasons why it formed this bullish. Number one, it closed at this area where the market is expected to reverse as a bullish. Number two, it got a rejection from buyers here, where the market is supposed to reverse and form a bullish candle on the next candle. Number three, you can see some buyers entry here. Look at these candles. Look these two candles. These buyers entry. It means that here, where this candle close, and this area, there are some strong buyers. Whatever happened on the left side will also affect the right side. Here, I can see some strong buyers movement. That's why we are seeing so many rejection here. It means that there are some buyers here. You can see this one also rejection. So it means that there are some buyers, they are trying to enter the market. So if they are trying to enter the market and they couldn't, then that means you wait where they will enter the market. And this is where the buyer choose to enter the market, this level, this reversal area that I've drawn on the left side. That's why buyers enter the market. Okay. Now you can see after this one break it reverse. That means there's another support level here, support area. Let's place the line here so I can show you this bullish and bearish candle. That means there are some support area here. So let's go to the left side. The first one is this. The first one is this one. This is the support area, the first level, the first support level. Okay. And now go to the left side. You can see it's acting as a support. Here also, it's acting as a support. Now the candle, the second line that we place, let's check it very well. If we place the line very well. Here you can see what I'm saying, that it serves as a resistance. Here also as a strong resistance where the market reverse. So you can see the market reverse, it touched the body. And here also, it just the wick, touch the body also. So, and here you can see that here you can see from this level. So this area also is a strong level. That's why this candle closed at that area with a rejection from buyers. So buyers enter market. So this is how you can draw support and resistance area with confidence. So let's say you choose 2-minute time. Choosing 2-minute times, 2-minute candlestick, choosing Choosing 2-minute candlestick, the chart will not be the same as before. You can see that this candle closed at that area on the left side, and then buyers enter. But here, a bearish candle formed with a new low. This is a new low, like I told you, that this is a strong selling pressure. That is when this candle is forming as a red, a strong selling pressure. But on reaching this point here, the buyers reject. The buyers reject the market. See that there are some buyers at this area. So the buyers are not here. Okay. Okay, where it break and where it continues. Okay. So if you are trading support and resistance strategy, you have to be fast. If you are using 1-minute candlestick, you have to be fast. If you are using 2-minute candlestick, you also have to be fast. But if you are using 5 minutes, you have enough time. Let me choose another level. Because it's the first level. I've already explained that one before. Let's say at this area here, maybe the price was somewhere here. Maybe the price was here, this bullish candle. Okay, I'll show you, and I'll tell you the reason why buyers area and sellers area is very much important. Not only buyers entry and let me first explain this level again, because OTC market respect levels. Mostly they respect levels. And OTC market, they always try to freak you out. That is, you will notice that the video I made, when I catch up the trend, when I catch up I catch up the reversal point which I know that the market will reverse. Once I capture it, you will notice that OTC market will try to fake me most of the time. They will try that maybe the market will close as a bullish. Then maybe at the last second, it just turned to a bearish. So this is the reason why OTC market is very much tricky at times. Okay. Now, this is a levels here. There are some levels. How do you know that there are some levels here? What do we mean by levels? Levels is the turning point in the market. The turning point in the market. Here we have so many turning points. We have bullish turning point. Here also bullish turning point. Here also bullish turning point. Bullish turning point. Then under we have bearish turning point, bearish turning point, bearish turning point. Here also bearish turning point. Now, how do you use levels here? Because these are levels that we want to use in trading on the right side, on the live candles. Here we have a resistance. Like I told you that you want to place your line very well to touch the body of the lower candle. You can see the bullish now is at the lower point, while the bearish is at the highest point. So touch it. Now check, go back. Check this one. Maybe this line I have drawn, maybe it's touching another body. Like now, I didn't see anybody. I didn't see any candlestick body that is touched. It's only the wick here, touches the wick. So I will go to the left side to check very well. Here also, it doesn't touch the body, but the wick. I will go again. Let's check. Doesn't touch the body. Yeah, I've gotten my answer. It touched the body. You can see it touched the body of this bullish candle. So means that this line I've drawn here is a strong level. Then I'll go back to that a place again, that area, to look for the next level. All this, if you are trading, if you are using 1 minute candlestick, all this will be done within 1 minute. Okay, look at the time. Now, this level I've done is very strong. Then I will go to the next one. Next one can be this one, or this one right here, or this one. So you choose any one. Just know that you want to capture where the market is to place your trade. Either the market, you can see the market is not stable. The market might be going up, going down. So maybe we are choosing one level that is very strong. Either you choose this one here, then go back and check if it is strong, if it is strong, if it is a strong level. Then either you choose this one here. Then once you choose this one, you see that this level is very strong. Quickly go back to the live candles. Then look at where the market will close. If the market will cross it, then that you decide what will be the next candle. Okay. Yeah. This another, maybe I choose this one, or let's say I choose this one, this top side. That means this level I have drawn is very strong. Now I have chosen this one. So I will go back again to check if this level, the second line I've drawn, is also strong. Then I can rely on that strong level. Yes, no need to go far. I have already gotten my answer. I can see it's touching the body of this bullish. That means this is a strong reversal area, strong levels. Now, any candle that closes in this level, it must surely reverse. There you can see it didn't touch the level, but it reversed. So you have the best opportunity that you should wait when the candle touch or reach this level before you place your trade or cross it. Don't trade when the candle is very near to the level. You can see some of you say you want to place a put option because it's still far from the level, but you never knew that maybe there's another strong level that you can find. So it is better for you to place your trade when the candle closes at that area with a rejection or below. You can see now the next candle form a bullish candle. So any candle that form at that area must surely reverse. Look at this one, at that strong resistance area. Okay, I'll show you. Like this one, it closed exactly at that resistance area, the next candle. So when you see this type of, don't place your trade when the candle is here, because you might say that the level is still far and you place your call option, but you never knew that maybe there's another level here that's very strong. Okay, so you can see the next candle form a bearish candle. Then go again. Let's see. You can see this one got rejection from that area. The next candle was a bearish. You can see the bearish candle closed at that area with a rejection. The next candle was a bullish. But this one closed at that level with a new low. You can see with a new low. Like I told you that if this candle form like this with a new low, the next candle will surely go down or go up if it's a bullish candle. This is a new low. The body is still far from the buyer's area, though it closes at the level. So it's still far from the buyer's area. There are two options why you should place your trade here. Check the level. If the level have been tested more than 2 times, then you should know that the level is not strong. Or if the level make a new low, then you should know that the level also is not strong. Either you go with bearish on the next candle or you go with bullish. So you can see it reached that level. If you check it on 30 minutes, 30-second chart, you will see some buyers here on 30-second chart. Let's see. You can see the market already reversed as a bullish, and you can see some buyers entry. You can see here, this is the first one, the first level. Here you can see the market already reversed, and you can see it broke the level for buyer center, means that there are some levels here. So if you check that on 15-second chart, you will see some buyers entry. This level, you can see still the buyers reverse, the market reverse. Check again on 10-second chart. You will see. You can see on 10-second chart, the market reversed very strong. On 5-second chart, check again. You can see the market is respecting this level so much. That means on 1-minute chart, it's telling us another story. On 1-minute chart, the market is telling us another story. That is a new low. Okay? When you see this kind of market, just place a put option. Okay? Now, there's a question now that says that which is how many candles? Let me check the question again. Okay, like how many candles body will it touch before you call it a strong level? Okay, it doesn't matter if it touch 100 candles, doesn't matter. But what we are looking for is 2 candles, 2 different body candles. Like now, if you touch this level, if you touch this line, make sure that this line you have drawn also touch another one, another level, another strong level. Like this one, maybe you touch it here. That means we are okay with that. That means the level is strong. No need to go further again to look for others. But you can go further to look for confirmation. Maybe it's still strong anyway. Yeah, I can still see that it's still strong. Then you look for the next one. So it doesn't matter. Okay, levels for the current price. Okay. Now I have 50, 40 something seconds. Okay. Now I'm seeing a bearish candle forming. I'll quickly go to the left side. Here. The strong level here. This one also. A strong level. Now look at this candle. The market got to that level and then retest. So I just place a call option. I will not place a put option here because look at this. I don't know what's wrong with this network. I will not place a put option here because you may say that there's some distance. Look at it. Which audio? Maybe you should check your area there. And let me check mine too. Check your area. Can you still hear me? Can you still hear me? Maybe it's the network problem. I don't know. Okay, you can still hear me. But you are complaining about the audio not really clear. Maybe you should check your side because there's no port here. Okay, like I was saying. Okay, yeah, it gave me a loss in trade. Maybe because I'm not steady to analyze the market. Yeah, it gave me a loss in trade. I don't know why it gave me a loss in trade. Not this OTC market, but most of the time, OTC market respect levels. Most of the time. But yeah, it gave me a loss in trade. In this type of situation, on a good market, it will reverse. Don't say that the level is still far. Yeah, the level is still far. Yeah, don't say that the level is still far. In this type of market situation, the market will reverse. You can see this upper wick you are seeing here. This this upper wick you are seeing here is a buyer's entry. So now let's check that on the lower time frame. Let's check that on 5 seconds. You will see this upper wick here. You will see that there are some buyers. You can see these two bullish candles. That means the market already reversed in 5 seconds. But I don't have time to analyze it very well. To analyze the level, you can see I'm very fast. So I don't have time to analyze the level to make sure that this market maybe to continue or reverse. And this is OTC market. OTC market is very dangerous, and you have to be careful about it. Okay, I'm trying to change it to 1 minute. Okay, now OTC market is very dangerous, and you should not always trade on OTC market. You can also apply this strategy on good market, on real market, not OTC. You can see that the video I make was only for yesterday. So today, I'm not sure if I'm going to take any video again. Maybe I will upload any video on YouTube again, my YouTube channel, because OTC market is very dangerous. So I don't always trade on OTC market. Don't always trade on OTC market. So I only take videos. Take 2 videos, then that's enough for me. But in real market, I can trade more than. Yes, we could have closed as a green. Yes, we could have closed as a green because here I can see some buyers entry here. Some buyers entry. You know that because of OTC market can give you fake move. There are some buyers entry here. That means that buyers want to go up. So I don't know what is stopping them to close as a bearish. So this is one of the reasons why you shouldn't be trading on OTC market all the time, except you want to reach your money. And if you observe the video I make, the video I upload, I saw something like this, wick candle like this. Can come to that. I saw wick bullish candle like this, wick bullish candle. I saw this wick bullish candle like this. So in this type of market situation, after a minor uptrend, that means the market always go up. But the video I make, which make me lose that trade because I saw this bullish candle, weak bullish. That means the next candle is supposed to be a bullish. You can see here it worked as a bullish, but the video I make was on 2 conditions. Number 1, the market is not good because I saw so many wicks in the market, and I didn't observe that because I was only looking at the momentum. So I didn't observe so many wicks. I didn't observe the wicks like this one. If you see this kind of market, it is not good. This one also is not good. Then the doji candlestick also is not good. This one also is not good. So when I saw that, I noticed that maybe it's because the market is not good. That's why it gave me a loss in trade. Now you can see that after this weak candle, the next candle is supposed to be a bearish, but according to this market situation, a minor uptrend, the next candle form a bullish. You can see this lower wick here. There are some sellers at this area. There are some sellers at this level because the sellers try to go down. This lower wick, the sellers try to go down, but because of this strong bullish movement, the buyers push the market higher and form close as a bullish candle. Let's check that on 5 seconds. Let me locate it in this area. You can see sellers entry here. You can see the strong sellers entry. This is the lower wick we are seeing in that bullish candle. This is the lower wick. So it means that sellers already enter in 5 seconds. So in this type of market situation, you should always avoid trading that on OTC market. So in real market, you can place your trade with confidence when you see this kind of market situation. Okay. Now, look at it now. This is a bullish candle. This is a bullish candle. Then this candle is forming. Maybe it's not that already, it has already reached this level, but it's still forming as a bullish. You know that it's going to close as a bullish. Quickly go to the left side. So don't go too far. Already we can see another one turning point here. You can see one turning point. Place the line at the lower body of the candle, of the level. Check if the level is very strong. Confirm the level is very strong. I didn't see it touching anybody here, any candle. Here also I didn't see. You can see that I'm very fast. It's not something that you will check very well to see. Once you see that the line doesn't touch the body, something like this, or the top side, something like this, the body, not the wick, the body, or something like this. Don't waste your time there. Go again and check if you touch it, the previous history. So, network, so now this. Okay, let's check this one. You touch it? No, you didn't touch it. Okay, let me change the chart because I don't think maybe it's the chart or whatever. I think it's network problem. Okay, can you guys still hearing me? Because I don't know what's wrong with the network. Can you still hear me? Hello? Okay. So I think it's the network problem. I think the network is bad. Okay. The network is not good. Now, let me share with you, how do you know if the market is good or if the market is not good? Like this now, this type of market is not good. Why did I say it's not good? You can see that there are so many levels. There are so many levels. There are so many levels. It might be maybe because of the network problem. I don't know what's happening nowadays. The network is just doing anyhow nowadays. I don't know why. Okay, now, like I said, that are you still hearing my voice? Okay, let's continue. Now, like I said, that this market is not good. Okay, no problem. This market is not good because we saw so many levels, so many turning points. Now, when you are trading compound trades, you should not choose this type of market if you are trading compound trade. But if you are trading SNL levels, this is the type of market you should choose. In compound trades, don't choose any pairs that has so many levels like this, but choose the pair that has maybe a few levels, not so many levels. You can see here we have so many levels. So on this type of market situation, compound trades will not work. And what I mean by compound trade is when you are placing put option, or call option, or call option. Maybe you decided to take 3 compound trades or 4 compound trades. You look at the left side. The first thing I do before I take compound trades, I will first check where this market, like this bullish bearish candle now. I will first check if you maybe if you notice that I always place the line whenever I saw a bearish candle. I'll place the line at the top. I'll first check where this bearish candle is from. Does it form from this strong level or okay? The difference between compound trade is when you are placing your trade in the direction of the trend or the momentum. Or let's say maybe you are trading like this. You saw a level, you place a put option. Then you know that the market will reverse, you place a call option. Again, you place a put option. Again, you still know that the market reverse, you place a call option. That is also a compound trade. Or compound trade is when you are placing trade like this, put option, put option, put option. Or like this, call option, call option, call option. Or something like this. You place call option, then the next candle, put option, again, call option. So this is compound trade. Then when you are trading levels, in compound trade, you are trading rapidly. You are not wasting time. That means that time your brain is working rapidly. Your mind, everything, your part of your body is working rapidly, and you are focusing on the market. And that means nothing is stopping you when you are trading compound trade. That is what I do. Like now, compound trade is when I saw that, okay, if I want to place a put option here, I will check if there's any level, any possible level where the market will reverse. Then if I'm trading SNL levels, I will have rest of mind. And one thing I want to advise you guys that whenever you are trading, whenever you are placing your trade, don't always focus on pattern. Try to interpret why this pattern is formed. You may saw this pattern, look at this, because I want to give that warning. You saw this pattern, bullish engulfing pattern. But do you know the reason why this pattern is formed? And some of you saw this pattern, you may like to place a put option. So don't always focus on pattern. Focus on what the market is telling you. We have a 1-2 move here, and we have a minor uptrend. So in this type of situation, this pattern will not work. Bullish engulfing pattern, though you may see a strong downtrend. You may see a strong downtrend, and you see this bullish engulfing pattern, bearish engulfing pattern. You may like to place a put option, but you are wrong because you are only obeying this pattern. Because any bearish engulfing pattern is always a reversal candlestick. That means the market will reverse in a downward movement. But here it didn't work. This kind of market, you always check what has happened in the market. Like now, show you. This is where the price is. You saw this bearish engulfing, but you don't analyze what is happening in the market. What is happening in the market? Number one, how do you analyze this area? Let me show you something. How do you analyze this area? because this is one of my secrets before I place my trade without even checking levels. How do you analyze this area? Let's say the price was this bearish candle, the live candle. It was this bearish candle. And you didn't know what will happen on the next candle. Then how do you analyze this candle, this market here? First thing you check. Now this is uptrend. First thing you check, okay, this is clear uptrend. The market is going up. Now you now check where are the weakness of buyers and where are the weakness of sellers, or where are the strongness or the strength of buyers or the strength of sellers. Here I can see that the strength of buyers started from here but end here. Again, sellers enter but end here. See, the power of buyers is still strong than the power of sellers here. That means the next candle will be bullish. Once I place a call option, I look at it. Again, I will not consider this buyer's entry, this buyer's movement again. I will now look at this candle, this bearish candle. Let me explain to you very well. I will look at this. You know that I use the power of buyers here and the power of sellers here to predict this bullish candle, that the next candle will be bullish. Now, again, this candle closed as a bullish candle. So, what will be the next candle? I look at the power of sellers here again and the power of buyers here. You can see that the sellers is very stronger than the buyers. So I place a put option. Okay. Now again, if I place a put option, you can see that this is how I trade without checking levels. If I place a put option, I will look at this candle again. The put option I place, if this candle now forms a strong candle, I will go with sellers. But if it forms as a weak candle, that means the continuation of this uptrend. You can see a spinning top candle, continuation of this uptrend. Then, and I saw this candle forming, I will look at it. I will look at the previous candle, bullish candle. This candle is very strong. And again, I noticed that the buyers also are very strong here. And here, I can only see some few sellers here. So it means that the sellers here are not strong. You can see the seller's entry. Here also the seller's entry. But here, strong bullish candle and a strong buyer's movement. That means the buyer are strong. Then I'll place a call option with confidence. Again, when I place a call option, some of you will be saying, might see this candle. Some of you might see this candle, Marubozu candle. Oh, this is a Marubozu candle. I'm going to place a put option. So if you reverse, which is very wrong because you saw some sellers here. Saw some sellers here. And this candle closed as a Marubozu candle. Then you want to place a put option, which is very wrong. Why is it wrong? Number one, check the levels. Check this seller's entry point here. This is seller's entry point. Now look at where this candle closed. This candle closed and it's still far close without rejection from, because this is seller's area. And this candle closed, what I mean by seller's area, this one, this week. This upper week and this one. So this the week I'm using as seller's entry point. So this is seller's area. Then on the seller's area, this bullish candle even show the power that yes, we are very strong in the market because already we have some buyers movement. And again, we have some strong buyers here. And again, the strong buyers. So, and it closed exactly at the seller's area without upper rejection from sellers, without any rejection from sellers. So it means that the buyers are still strong. Then you now consider this trend that yes, the trend is uptrend. So I have the reason that this candle is very strong without rejection and a minor uptrend. And again, previously I can see a strong candle. So I have three reasons to now go with buyers on the next candle. So this is how you can be predicting the next candle if you are trading compound trades without using levels or without focusing on the market situation. or anything else. So you analyze what is happening in the market. Never you say because you saw a bullish engulfing. Now you might say maybe because of this bullish engulfing, that's why the next candle form a green candle. It might be part of the reason, but that is not the main reason. The main reason that is close is that the close at the seller's area without upper rejection. So it's a strong bullish candle. Then you now add the bullish engulfing. Then you now add the uptrend. Then you now add this strong buyer's entry, not weak like this spirit. Then you now add strong buyer's movement. That's why you have the whole reason to now place a call option on the next candle. So when you place a call option, now look at this candle that formed, and you can see it crossed the seller's area. See, this is seller's entry point here, and this candle close here with the rejection, and again at the resistance area. Now you may be wondering that why did I know that this is a resistance area? Because it already break the level. If you remember, they want to know that when you are placing your line, you must at least touch two lines. This one. It must at least touch two lines. This one, this one. So 1, 2. Then move. And when this candle close at the resistance area. So, and now it closed at the resistance area with a sign of reversal. Yes, that is number one reason. And again, with upper rejection and lower rejection, weakness of buyers. Number two reason. Then now look at it. Now look at it again. Where is the major trend down? The major trend is down. These are the reasons why you should go with put option on the next candle. Put option on the next candle. So whenever you say you want to place your trade, you are looking at the pattern, or you saw a spinning top and it didn't reverse on the level, it may be because you are only checking the spinning top to reverse at the support or resistance, or you didn't observe what the market is doing. So one thing about binary option is that you must know what the market is doing before you place your trade. You must know what the market. That's why in the main group, someone said this is money star pattern. Let me try to show you money star like this one. This is money star pattern. Let's come to form a bullet. But you might all the time you'll be looking at this money star pattern. That okay, after this money star pattern, after a downtrend, next candle will be bullish. But you don't know the psychology behind this money star pattern. That's why I say that in Forex, it works. Let me say, in Forex, it works 98%. But in binary, it's another phenomenon. In binary, it might work 100%. It might work 20%. It might work 0%. It might work 10%. So in binary is another phenomenon. So don't compare Forex and binary to be the same when you are trading. And don't always look at pattern. Try to understand what the market is doing. Now, look at this bullish candle that formed. And you know that the next level is here. The next level is here. So do you want to tell me that if this bullish candle form at this level as a money star pattern to make a uptrend, you tell me that the next candle will be a bullish? It can't be a bullish. So you should always observe why this pattern is formed and why you should place your trade before when this pattern is formed. Like now, there's a gap to this level, and there's no even sign of seller's entry here. That's why the next candle form a bullish. Even buyers, a bullish candle again. So it means that you must observe what the market is doing. Don't just follow the pattern. Don't just follow the candlestick. The thing that can make you profitable in binary option is number one, candlestick psychology. Number two, observing the market movement and try to interpret what the market is doing. This is the most hardest way for some traders nowadays. They don't know how to interpret what the market is doing. That's why they keep placing their trade and they keep complaining that strategy doesn't work. It works most of the time and doesn't work most of the time. So always interpret what the market is doing. Downtrend, uptrend. Okay, here buyers movement, sellers movement, buyers movement, top rejection. So this is a sign that sellers will become weak at any time if any reversal candlestick appear. Lower rejection. So buyers will become weak at any time. Here the buyers enter from here very strongly. These are the tips for you to be interpreting the market situation, the market structure. Yes, we can see a momentum here. That means on the left side, we must see another momentum. Now, there's one question I saw on the group, the VIP group. That is, why did I say something like this? Something like this is a weak sellers movement, and something like this is a strong buyers movement. I say something like this a weak sellers, something like this a strong buyers. Like now in this type of situation, show you this type of situation here, the buyers are weak. This type of situation here, the sellers are strong. Here we have strong bearish candle 4. Here we have very bullish candle 4 again. But compare the strongness of these candles to this one. That means the sellers here are very strong, but the buyers here are weak. Now, in that video, I saw for example, let me show you how the market is done that way. I saw that after this bullish candle, the next candle was a red, followed by a weak candle, then followed by 4 red. Bullish candle, next candle form a red, followed by a weak candle, followed by 4 red. That means if we are adding the 4 red and the bullish candle that formed is 5 green. So even though the 5 green is very small, it's still stronger than this candle that formed 4 red. That's why I say the sellers here are very weak, the buyers here are very strong. But because of OTC market, the candle is supposed to go up, but it didn't go up. OTC market is not good most of the time, and they respect levels most of the time. Okay. So in this type of situation here, the sellers are strong, the buyers are weak. Let me show you some examples. Here, the sellers are weak, the buyers are strong. We have 6 candles here. We have 2 candles. Don't say this one also is also a part of strong seller, though it's a downtrend, the seller movement, but it cannot be added as strong sellers movement. Because here we can see some buyers entry. This doji candlestick is a bullish candle because buyers are not interested in decision between buyers and sellers. That's why the next candle form. So here already buyers are already stopped this bearish power. Okay, like this one now. This is a strong bearish candle and this is a strong bullish. At this time, the bullish is here is very strong, and bearish candles, the sellers here are strong, and the buyers here are weak, are not strong. I'll show you. Here we can see so many strong bearish candles. So the sellers here are strong, but if you see another bullish candle, it may not be strong than this bearish. Okay, this is how you can be analyzing the market by observing the market movement and check the levels, and again interpret what the market is doing. Now, I still got some requests that how do you use major uptrend and minor uptrend, and or how do you use the trend entirely to trade on the chart? You may notice that anytime I place my trade, I always zoom out like this. Most of the time, you will see this red that appear. Most of the time, you will see this red. You will see this red that appear most of the time because I zoom out the whole chart just for me to see properly what is happening in the market. So here, before I start trading, I zoom out like this. Then I will check the market start from here. You can go further again to start analyzing the trend. but here I'm right here. So the market start from here, went down again, it went up again, it went down. So that means from this level, this is a major downtrend. This is major downtrend. Now I have gotten my major downtrend. I look at the market again. I'm still seeing another downtrend here. Another minor downtrend. So now we have the major downtrend and now we have the minor downtrend. This is for sellers. But for buyers here, we also have the major uptrend for buyers. Major uptrend for buyers, and here we have the minor uptrend for buyers. So don't get confused. The buyers, if you see major downtrend and minor downtrend, the buyers also will also got their own trend if you want to go with them. Here we have the major downtrend of sellers and the minor downtrend of buyers, and the minor downtrend, the major downtrend of sellers and the minor downtrend of sellers here. Here we have the major uptrend for buyers and the minor uptrend for buyers. So this is how you first analyze. But here, the major thing I will choose is this sellers, because here, look at where the sellers started, the major trend of sellers started from here, while the buyers trend started from here. That means here, the buyers are not strong. So the buyers, I do not focus on the buyers trend, but only with the sellers. So I'm going with the sellers here because of the strong major trend. Now we have gotten our trend now. Look at the live candles. How do you now follow the trend in analyzing these candles? First thing is that this is downtrend, major downtrend, and also minor up. That means anytime a bullish candle falls, trying to go more up, check the trend. Is it a strong downtrend? Is it a minor downtrend, or is it a major downtrend? Now, after checking the trend, and this bullish candle is trying to close, then check the possible level. That means if the level is here, and you saw that you have to place a put option, that means you are going this trend. You are going with this trend. But in this type of market situation, if the major trend is very strong than the major downtrend, if the major uptrend is very strong than the major downtrend, maybe the major uptrend started from somewhere here like this, and you saw this kind of market, this bullish, and that means you should not place a put option because the major trend is strong. Here, the major trend, downtrend is strong, and also minor downtrend is also strong. That means you should look for put option. That means you are following this trend. You are following this also downtrend. Then, if you want to go with uptrend, that means at this type of market situation, this bullish that formed here, the next candle is supposed to be a bullish. So, why is it that the trend is very much important in the market? Number one, the trend tells you the power movement of both buyers and sellers. The trend lets you know that who is in power, who owns the market right now, and who is controlling the market. If you see a downtrend like this, the sellers are controlling the market. If you see a uptrend like this, the buyers are controlling the market. But here, the sellers are controlling the market most of the time. How is it most of the time? You will notice that even a strong momentum will also reverse at the level. A strong momentum also reverse. A strong bullish candle will reverse. You might see that even though buyers will try to form their power, to prove their power, the sellers will even prove their power more than them. Look at this strong bullish candle form, then the next candle form a two good bearish candle, showing that the downtrend is very strong. Form a two bearish candle, very strong bearish candle. Here, the buyers also try here, form a three bullish candle. Then sellers will turn it back to them, forming two strong bearish candles because of the downtrend. Yeah, I think that from this level, the market starts going to look at this one. Buyers try to reach there, but what happened again? Sellers proved it to them that we are stronger than you in the market. So sellers are following their rules in this trend. Like, look at this one, strong bullish. But what happened? Sellers return it back to be 6 or 5 bearish. Here also, one bullish. So sellers return it back to them, showing them that they are stronger in the market. So it means that what is happening here is telling you that this major downtrend is affecting the buyers movement. So it's stopping the buyers not to be strong, and it's making the sellers to be stronger. Okay, that is what is happening in the market. Here you can see that the uptrend for buyers started from here. The uptrend for buyers started from here. And if you look at it, if sellers form a bearish candle, then buyers will return it back to them, maybe forming 2 or more bullish. Like, look at this one now. We have 2 bearish candles. The buyers return it back to them to form 4 bullish candles. Here also, 1 bearish candle. The buyers return it back to them, forming 3 bullish candles. Here also, okay, now the sellers are now putting themselves up, making themselves stronger here. You can see so many weeks, but here the buyers still attain highs. The buyers still attain the highs. Here again, sellers try to break, but buyers return it back to them, forming 4 bullish candles or 5 bullish candles. Here also, the sellers, then buyers return it back to them, forming 5 bullish candles. Here also 2 bullish and bearish, 5 bullish. Here also, you can see 3 bearish, 5 and 3 strong bullish candles, because it's stronger than this bearish. You can see that the trend also play important role. That's why I also observe all these trends when I take my trade. I'll first check the trend, the major trend. Yes, major trend is downtrend. Major trend is downtrend. That tells me that anytime buyer will try to make a strongness or prove themselves, they prove their power in the market, the sellers will return it back to them double. In this type of market situation, which is downtrend, strong downtrend, the sellers will try to return back to them in double. Like now, if buyers are trying to make, like now, look at this strong bullish candle. It means that buyers are trying to form their power. But because the trend is still downtrend, if sellers should enter from here, the sellers will even change their entry to multiple red candles. That's why we always say that the trend is your friend. It works. If you follow the trend in forex, you can get even high winning ratio. That means that if you see a downtrend, you follow the downtrend. Like now, buyers enter the market, but what happens? Sellers form a strong bearish candle, which is bigger than this bullish candle. So it means that the buyers are trying to go more. But if now buyers try all their possible power to attain this level, which is the level is for the major downtrend, and they manage to break this level, now the movement of buyers are started. That means the power of buyers are started. That means buyers will now have control over the market. So buyers will form their own major uptrend, and again their minor uptrend. Like now, the sellers started their uptrend from downtrend from here, the major downtrend. You go further, you will see where buyers started their own. You can see here, the buyers started their own. The buyers started their own major uptrend here. Major uptrend, and the buyers started their own. And here, see here, minor uptrend. So it depends that if the market should cross this major uptrend for the buyers, then the sellers will now have full power over the market. So this is why the trend moved the market. The trend, even most of the time, if you place your trade and you didn't observe the trend, maybe you place your trade and you're expecting a call option or put option. Like now, you saw a rejection from here. Maybe there are some sellers area here, and you saw this rejection. And you notice that the trend also is uptrend. You didn't notice that, but you are seeing a reason why you should place a put option here. But you didn't notice that the trend is uptrend. But what happened? The market formed a bullish. That means your analysis is wrong because you didn't notice this uptrend here, this minor uptrend. So this minor uptrend will now prove to you that the next candle is supposed to be bullish, not bearish at this time. It can only be a bearish if the market attains the highs. And what I mean by the highs, here we have how many highs? We have one highs here, one highs, another highs, another highs. So if the market should attain these highs here and crosses it, then the next candle will be a bearish. Because here we have so many highs, the highs here, that is the highs of the market. Now, if bullish candle should attain the highs with a rejection, telling you that the next candle is supposed to be, that means this is where the downtrend is working. It's working very strongly. But now the downtrend proved to me that the buyers are still strong. Because here you can see a weak buyers and weak sellers. So the buyers are still strong because of this uptrend. That's why I see buyers making so many bullish candles here. But on reaching this level, there are moments of stop. That means the power of buyers start to reduce their power in this candle, showing they are reducing their power in this candle. That's why the seller take over, forming a bearish movement here. Like I told you that whatever that happened on the left side will also happen on the right side. If you see a momentum on the left side, then you must see a momentum on the right side. That's why these are one of the reasons why you always see me placing in this type of market, put option, put option, put option, put option. Okay? This is how you can analyze the market. Don't always trade on levels if you don't have proper strong reason why you should place your trade. And you should always observe the candle. And not only observe the candle, try to interpret what the market is doing. Another way to interpret is that check how the market is tested. Here, the buyers tried here failed. You take note of that. They tried the second time failed. Take note of that. They tried the third time failed. Take note of that. The fourth time he tried failed. The fifth time he also tried failed. And now what happened? He tried from this level. You can see where the market is trying. The market tried from here, he failed. From this level, from this point here, he tried here, he failed. Again, try here, he failed. It didn't show strongness. But now the market went all the way because already it has tried so many times. So this is one of the things. This is how you can be analyzing the trials of sellers and buyers in the market. It tried so many times to break this level here, but couldn't break it. But still, they went down the market. The sellers put the price lower. Now, the buyers used that opportunity to gain more strength. That's why you've seen that after the seller put the price lower to this point, the buyers gain more strength, that they will not respect this level. You can see the market went up again. You can see it closed exactly at that level with a rejection. So you might have placed a put option and the market is trying to show or is trying to freak you out by showing a red candle here, which we have placed a put option, but unfortunately it closed as a green. So you should know that the buyers try so many times here to break this level. That's why I see this upper week. And now the market went down. The sellers put the market lower. So buyers already gain more strength to push the price higher. So they will not respect its level. That means after this breakout, the buyers will still continue. And here, this breakout now proves to me that buyers also become weak. This reversal candlestick. Sellers entered. Now check the other trial for buyers. Look at this one. Look at this level. Buyers tried here, he failed. Again, he tried the second time, he failed. Try the third time, you fail. Sellers put the price lower. But again, buyers gain more strength starting from this level. Went up very strongly. On reaching this level, it got rejection. So it did not quickly revert because the buyers tried so many times here, they failed. So the market went down. Buyers used the opportunity to gain more strength to break this level. That's why you see that after this candle, the next candle form a bullish, a strong bullish, and the next candle also. Okay, so this is one of the reasons why you place your trade. Now look at this one. The buyers try here, he failed. He try here a second time, he failed. He try a third time, he failed. He even break it a little bit, still failed. Here also he tried. Here also he tried. Now the market is still in this type of market. The market is consolidating. So the buyers also are now trying, but here he tried first time, try second time. So the buyers went down again. The sellers pushed the price lower again. Buyers gain more strength to push the price higher. So after he pushed the price higher, he break that level. So and this level that the buyers break now become a support, a strong support. So sellers also try fail. He try fail. He try fail again. He try fail. Now buyers push the price higher. So you can see that the sellers push the price lower to this level, but they will not reverse because they gain more strength. These are the strengths here. Let me show you. The strength of buyers here and sellers here is more than the previous strength which they used to want to break this level. It's more than this all these sellers entry. You can see they try first time fail, the second time fail, the third time fail, the fourth time fail, and now they gain more strength, forming strong bullish and bearish, strong bearish, strong bearish. Then on reaching this level, they got rejection. So it will not reverse. That's why I always say whenever you see a momentum like this, check the left side, check what have happened on the left side. Then whenever you observe it and you know the reason of you placing your trade, you should know that if the bearish candle approach this level, the market will not easily pass. Until you see a weak candle before you know that the market will reverse. And don't say that this weak candle close below, so the market will continue going down. No. Until you see a weak candle, the market will reverse. So this is how you can analyze market, and this is how you can be trading on momentum. Most of the time, once I see that the sellers try a second time, fail, I knew that next time they will try, it will be in form of a momentum. That's why I will just be placing put option. I will not even check, but I will have observed or take note that there are some levels here. So I will just zoom in the chart very clear just for me to be trading, placing my trade, put option, put option, put option. Some of you say, you reach this level, supposed to reverse. No, I still place a put option because of what I have observed on the left side. And I do things sharply. I'm not the one I will do something that make you see. That's why this secret I'm sharing with you are my most secret. Okay, I don't always share secret with people, but I'm sharing this secret with you that when I look at the chart like this and look at this, okay, seller try pay, then I'll quickly go back. I quickly go to this live candles, start placing my trade because I already know what has happened here. So I will not just be showing you, yes, you pay, then you now know the reason why you are placing a put option. No. But because of you guys, I'm sharing this with you, this level. If I saw this level, I know that sellers will form a momentum here. Now look for the next level, the trial level. Buyers try a fail, even though they try very strongly, fail. Seller center. Again, they try the second time, they fail. And what happened? The market went all the way down. Still went all the way down. Buyers use their strength. Again, they are reaching this level, they become weak because now they will not break this level because the market already showed that the sellers are still more powerful because the level, the trend is supposed not to go down like this. It's supposed to reach at least somewhere here before buyers will show their power in the market, not a strong downtrend like this because this strong downtrend is still working here. Still working here. Okay, and now again the sellers put the price lower. So sellers are now more powerful than buyers. No, buyers are trying to go more for reaching this level. They fail. Again, the sellers put the price lower. Now, here the buyers are trying to show their power. That means if you are a forex trader, this is the level right here. This is the level. If you are a forex trader and you have some decent or there's some good amount in your account, just buy the market. Buy the market from this level because this is where the buyers are heading to this level right here. The buyers are heading to this level right here. So just buy the market because here the buyers are trying to show their power, prove their power. Even though the sellers will try to enter, but this is where the market is heading to, this level. Here, this level. So just buy the market and you notice that you might have gotten some good profit market. So I will show you some strategy, and maybe anytime I announce a forex class, I will show you some strategy, and this strategy will work most of the time for me. And also you can apply candlestick psychology in forex too. Some of you are saying, how is that possible? It's very simple. It's very simple if you understand deeply about the market. Okay? If you have any question, you can ask. If you have any question, you can ask. Is it about the trend, or is it about the seller's area or buyer's area or the reversal area? Okay. Okay, I'm listening, guys. Not taking too much of our time. If you have any question, you can ask. Or if you don't have question, maybe you can proceed to the VIP group. Okay. So these are the things you need to observe in the market when placing your trade. Don't just follow the candles alone. Follow what the market is doing. Here we can see that a bearish engulfing pattern work here. In some reason, it work here for some reason, with some reason. So it doesn't just work anyhow all the time. You should not be seeing bearish engulfing and then you work. Bearish engulfing and then you work. Bullish engulfing and then you work. You must have some other hidden reason why it should work. And you must try to interpret the market. Let me quickly recap how to interpret the market or how to understand the market language, the candlestick language. Here we have, let me say I want to analyze this area. I want to analyze this area. Okay, here we have a bearish downtrend, bearish trend. It means that sellers are more powerful here. But here we have the buyer's entry. It means that from this first candle that formed a bullish candle after these candles, it means that buyers try to go more of it rejected from sellers, then sellers push the price lower. Let me show you. That means the sellers push the price lower here. The sellers push the price lower, and then buyers try to go more up again. The sellers, on reaching this level, sellers push the price lower again. Buyers try to go more up again. So when I see these three candles that are showing the sign of buyers and sellers fighting in the market, then I will now consider how next candle will form, which is a bearish candle. So I will consider it that this last candle that formed is a reversal candlestick or a continuation candlestick. If it forms as a reversal candlestick, I quickly go and check on the levels on the left side to see maybe this candle form at the level. Then I will know that I will place a put option here. So I will first check what is happening in the candles. The candle, that's why I say candles tell you a story about the market. And in this story, how do you tell the story that sellers are here? You can see this week here. The sellers are there. The sellers are there. And here, the buyers are there. The buyers are here. So now this candle cross that level with also a rejection. It means that sellers are trying so many times to enter the market, but buyers are still trying not to allow them. But here we have seller's entry, 1, 2, 3. Here we have buyer's entry, 1, 2. So here we have possibility of going with seller because of these 3 reasons. The first reason, second reason, and the third reason. So we have possibility. We only have 2 possibilities to go with seller. That means I'll place a put option. I place a put option on the next candle. Once I place a put option, I'll look at this candle the way it forms. Okay, sellers try to go down, then rejected from buyers. So the buyers are here, and this candle close here. It closed at where the sellers are trying to enter the market. So it closed here. Still, there's a gap to the next candle. Then I'll place a put option. Now I place a put option. I'm supposed to see a strong bearish candle like this, not weak candle like this. It means that sellers will now give up in the market for the buyers to enter. So these are the steps you need to take. Don't just say because you saw these weak candles and then it will continue the market. Okay, in 5 minutes, you need time, and you need to 5 minutes is a waste of time for me. That's why I don't always trade on 5 minutes. It's a waste of time because before this candle will come, it take 5 minutes. So why should I be waiting? Okay, now I want to analyze this market, or I want to draw the support level with this 5 minute candle. I've changed the chart, the candlestick chart to 5 minutes. Then I'll go here. I'll go to this time, expiry time. I'll check where is 5 minutes. This is 5 minutes. This is almost 5 minutes. This is 4. So if you don't understand how to choose expiry time here on 5 minutes, either you place this plus sign. This is 1902. That means you expect to see 1907. 1907. So now in 1907, the market or the candle already changed to 5 minutes. So 5 minutes has already started. That means you change it to 1906. Because if I should click on this plus sign, it will take me to 1915. It means that there is another time in time. So here the 5 minutes has already started. Now I will go on the left side. Where are the levels? There's a level here. This level. Is it strong enough? Or can I go with it? I will confirm it here. Confirm it here. See, it's still not strong enough because I'm seeing. Let me place it here. Okay, it's strong here, it's work here. Now I will check the next one. Which one is still the next level? So I'm doing this in the next 5 minutes. Next level is here. Is it strong enough? This one here. It's either I go back or I check the previous one. That is, it's working here. That will be next time because there's no more time again. That this is working here. Here also it works. So this is a strong level, a strong support level. So in the next 5 minutes, if this candle will close at that level, you can see at this level the buyers are waiting in the market. That's why you see this candle, this bearish candle, and got a rejection from buyers. It means that their buyers are here. So this candle close here. That means the closing price of the candle is still far from the buyer's area. Now you wait how this candle will close. Is it going to close in this area, or is it going to cross it, or is it going to create a new low? So you wait, look at the time when it's exactly 30 seconds to the closing time, to the purchase time, then place or trade, either in call option or in put option. So you can see Yeah, it should be 1905. No, this is 1906 because you are using 5 minutes, not 4 minutes. So it's 1906. Now you can see a strong seller's entry. It broke this level. A strong seller's entry. It broke this level. Now take note where this candle got rejected and where it reached before it rejected from buyers. Buyers and here. Because this candle tried to go down on reaching this level, buyers reject the market. Still, he tried to close here. Again, the buyers also reject the market because the buyers are here. That's why you are seeing a strong rejection like this. But now watch how this candle will close. Is it going to close as a bearish, close in this level, or is it going to close below, or is it going to cross it? Okay, it must close as a bearish, not bullish. So yeah, the trend is uptrend here, but at this time it must close as a bearish candle because of this candle. So let's see how it will close. Okay, we have 30 something minutes, seconds. Okay, so you can see it closed as a bearish. Still far from the level. Okay, you can see it closed as a bearish. Still far from the level. Either you place a put option because if there's no level here on the left side, that's why I say whenever you see a strong level, always place your trade once. Don't use the level twice again. Try to find another strong level. If there's no level here, then you now place a put option again. But if there's a strong level where this candle close, you place a call option. So we don't know what will be the next candle here. Okay. You can see what I said that this candle is very far from this level. That means the level is here. And this candle close here. That means this candle must form a bullish, a bearish, not bullish. Okay. This is how you can use 5 minutes. And whenever you saw a level, let me warn you guys, whenever you see a level tested multiple times, don't use it. Here, this is why I choose the level. I choose the level here. I choose the level. Here, the level has been tested how many times? This is first level. This is the first area. No, this is, let me show you. Okay, this is where I choose the level. Here, this bullish candle, this bullish candle, and here again on the left side, this is where I choose the second level. So now, when I choose this level, I look at it. How many candles that close at that level that didn't reverse or reverse? Here, I only saw one. It closed at the level it reversed. That means I'm sure enough that the market will respect that level very well. The market will respect that level once again. So if the market didn't respect, and if there's any price action that happened at that level, the next one, that means the level is no more useful, is no more powerful again. That means we should consider finding another level. Here, the level is used one. That means it closed at the level, it places a put option. And here it crossed the level. That means the level has also been used. Crossing the level is just saying that, okay, the market didn't obey this level. The market didn't obey these rules. Okay, the market crossed it. That means this level has been used twice. Now, on the third time, if this market should come to this level, it will not respect, except we find another strong level. It will not respect. Instead, the market will continue going down or continue going up. Okay. So levels tested multiple times should not be used more than 2 times. More than 2 times. Once you find your area like this, you saw the level has been used here, and again has been used crossing here. That means still part of using this level. That means it has been used twice. So if the market should approach this level, if the market should approach this level, it will not respect because it already been used twice after I have found my level here on the left side. So the market use it here once, use it there twice. Okay. And another thing, when you are trading with support and resistance, you can also be trading by waiting for marginal safety. That is the last second when you saw a bearish candle, you know that the level is here. Just place a call option. Once you saw a bearish candle forming like this, and you know that the level is here, you place a call option because you know that the level is here. Just place a call option. Though you still close as a bearish, but you place a call option. But in this type of market, in this type of trade, you are gambling. You are not trading. Because you are trading when the market approaches the level, you place a call or you place a put. So you are not trading, you are gambling. Okay? But still, you can still have some winning ratio in that using that strategy. You know that the market will approach this level or this level, you place a call. Though you still close as a bearish. Now this candle close at this level, you place a call. So it might close as a bearish or it might close as a bullish. So you are still safe, but you are not trading in that kind of situation. You are only gambling. And one thing about trading is that if you gamble the market will also gamble you. Take note of that. If you gamble the market will also gamble you. If you try to make or try to become rich in the market will also try to become rich from you. If you fail to obey the rules in the market will also fail to obey your own rules. Now you can see, like what I said, that here the market, this is a strong level. Let's say this is a strong level that we have drawn. The market reversed here, also went up and reversed. But here, this is not the level this market is respecting. Maybe it's respecting a level somewhere else. That's why it reversed. And here, what happened? This candle closed at that level, but it didn't reverse. So it means that level tested here will not work on the next candle. It is 50. It is 50-50. That is, the third time, if the market should approach the level on the third time, it will not respect, or it might respect. So it is 50-50. That means you are not safe on the third trial. You should always trade on the first trial. This can give you short. That means trade on the first trial. Once you win the first trial, never you take the second one again. The second one can be also 50-50 if you are confident or you are taking risks. Can also be 50-50. So you should avoid it. First trial is good than the second trial or the third trial. Here we only have two trials, 1, 2. So the two trial we have is already be exhausted. That means the third one will not be used. And you can see a spinning top candle. This is why I say that always observe the market movement before you place your trade. Always observe the market movement. You might see this spinning top candle that come here, but it didn't reverse. You might say, oh, this is spinning top candle come at the support level, so it will reverse. But still, it went down. At this time, this spinning top candle is a continuation of this bearish downtrend, not a reversal. Not a reversal at this time. So it will not work because of some reason. And what are those reasons? Number one, the first reason is the level is tested multiple times. The second reason is that sellers try to break this level, but the third time they try a very strong candle. Again, they try. And now this candle, if you want to know the difference between binary and forex trading, go to other brokers. Check this bearish candle where it's from. You will know that this bearish candle is a bullish in others broker. Go to others broker, check their candles. Observe it. This bearish candle that formed here is a bullish in others broker, not bearish here. This one is different. That's why I say or a binary option is another phenomenon.